Here's to bold visionaries, faithful investors who make God the goal. While some may call them crazy, we see a joyful adventure. God has empowered us to use courageous capital, solving the world's greatest problems under His power for His glory. Welcome to the Faith-Driven Investor Podcast. Opinions expressed in this podcast, including the team and guests, are solely their opinions. Hosts and guests may maintain positions and securities discussed. This podcast is for informational purposes only. It should not be relied upon as specific investment advice for any individual or organization. Thanks for listening.
John Coleman, what was that you were just saying? Should we start the podcast with that line?
I just wanted to note that our friend Henry Kaestner was recently making the rounds on social media with a few filters applied or AI modifications applied to his appearance, which seemed to be laying the foundation for some skin treatments, potentially some lip injections for Henry. And Henry, if you're listening, brother, you just know you've never looked better. We love you just the way you are, but if that's where the direction you want to go, we're fully supportive. We love Henry in any shape or form.
Oh, that's so good. We're off to a perfect start on the 2025 Year in Review Faith-Driven Investor Marks on the Markets podcast. Friends, welcome. It's great to have you with us. Henry Kaestner is the one member of the band that we wish we had here, but otherwise we've got an incredible squad. Justin Forman, President and Executive Director of Faith-Driven Movements. Not one, but two of your loyal FDI podcast hosts of John Coleman and Roush are here with us. We typically, for just the safety of everyone involved, try to keep them separate and just do one of them per episode. But they are both with us here today because it's a big topic and we're recapping 2025 in the markets. Friends, glad to have you with us. Hope you had a wonderful Thanksgiving. Welcome to December. It is hard to believe we are here as this FDI pod episode will release on Monday, December 1st. But just to set the stage, we're recording this just before Thanksgiving. So wishing all of you and your loved ones just a tremendous and blessed Advent season ahead. Friends, good to have you with us. I know this pod will drop post-Thanksgiving, but maybe give us some of the pre-Thanksgiving plans for each of you guys. How you doing? John, start us off.
Yeah, we're just hanging out. I told Richard we had two cousins and one friend in addition to my 4 kids this weekend. So 7 kids over the weekend who are still at my house, plus the addition of our 6 new chickens and chicken coop. So I am effectively some type of homesteading reality TV series right now, and then headed into the holidays. Thankfully, we won't be on any planes, but I do think we're going to see something like 60 relatives over the next 5 or 6 days. So we are incredibly blessed and thankful for the great families that we have and for not having to spend the night away from home or get on a plane this week.
Come on. You spent a little bit of time on planes this year. Luke, you got to storm a field this past weekend, right? Stanford took down Cal.
We had a big win in the big game, 128th year in a row. The band was not on the field at the end of the game, and it was a regular old 31-10 beat down, which was wonderful. So I got more of that this week, just kind of wrapping up Sam's college career and getting time with family and fired up to be alive. It's a great week.
Come on. We're glad to have you with us. What are the Roushes doing for Thanksgiving?
We're actually doing a team dinner. So the football team gets together. Their chef cooks a big meal. Families can buy tickets and go have dinner with your kids and their teammates and the parents and siblings of their teammates. So it's a really big kind of special thing. They practice in the morning, then we have the afternoon lunch, and then we have the afternoon off together, which is very, very rare this time of year. So we're looking forward to that.
And a Stanford team dinner, I'm assuming you can pay in cash, crypto, or vested equity shares of companies like startup companies.
They do accept derivatives as long as they're wanted. Yeah.
That's amazing. Hey, for those that don't know, Luke's son Sam is a senior tight end at Stanford, having a remarkable year. And Luke is wrapping up that season. We're all rooting for Stanford, Luke, as they take on the Irish. They could really cause some college football playoff chaos.
It's good to be an underdog, and it's good to have an opportunity like we got next weekend. So fired up.
Yes, sir. And then Justin Forman joining us from usually on the faith-driven entrepreneur side of the house. On the FDI pod, as it's awesome to have you with us. I think it'd be great to get your voice in for as we recap 2025. But how's Team Forman? I know Faith Driven is also just coming off their big annual retreat.
Yeah, Team Foreman, we are celebrating just a great week with a team of nearly about 50 people that spread out across a dozen different states, a dozen different countries, and it's just a unique opportunity to get everybody together. And thrilled to have Luke join us there for a couple of the days just to celebrate just what God has been doing across this movement and through the team. And so it was great to do that last week. And then this week, we get to experience kind of that West Texas Friday Night Lights kind of feel of pace. So just think all the things that you see in the movie and the TV show are true. And so we're going to get a chance to experience a little bit of that. We are undecided on whether or not we are going to be boycotting the Baylor football game on Saturday. Not sure. We're going to see how this week plays out, but hopeful that they could pull it out. But man, as you know, Richard, some uncertainty amidst the program right now.
Clear eyes, full heart, Justin. Clear eyes, full heart.
Can't lose.
Go
Can't
get
lose. Texas forever.
Texas forever.
We're wandering in the desert a little bit here. Justin Forman and I are as diehard Baylor fans. Well, sounds like amazing Thanksgivings up in advance. The Cunninghams are getting ready to welcome Marshall, my wife's family, to town, and that is 24 relatives who will descend upon Austin. I've married into a 9-sibling family. We've got husbands, wives, kids, grandkids, mom and dad coming. It's going to be full-blown chaos here in Austin, Texas.
You got to talk about one of the best traditions, because like most people would think during the Thanksgiving week, Richard, that people take off, like you don't fire up PowerPoint, there's no decks involved. But rumor has it that something has changed in Marshall's family.
Yeah, with this many bodies, you got to have like one kind of consolidated way to give updates. So it's not just like a 17-hour dinner. And so we've started doing a little bit of like investor interview review. And so each of the kind of sets of family. So you've got mom and dad, my in-laws, plus all 9 siblings get the opportunity to walk through their kind of shareholder meeting notes. And so Marshall and I've put our slides together, kind of State of the Union in the Cunningham home.
Awesome. That is awesome.
And everyone else will do it too.
That's
kind
great.
of recap the big highlights of 2025. So Justin, timely transition, because that's what we're doing here today, is we're talking 2025. And it's goodness gracious, we're 11 out of 12 of the months completed. But what we're going to do, friends, as you're tuning in, is on today's episode, John, Luke, Justin are each going to just kind of provide like a synopsis of the year from the seat they sit in. And then I think that's going to unearth a ton of good, just like commentary that we can all press into as it relates to the faith-driven investing space, just broader kind of markets and economic headlines generally. And John, while I've got you right here with your microphone off, you get to volunteer as tribute to lead us off as you just kind of think about, hey, what does 2025 look like from your vantage point as you're to kind of recap the year?
Yeah, absolutely. So I think we're doing updates on markets as well as the faith-driven ecosystem.
Correct.
I was trying to think about how to boil down like my themes for the year in markets. And I would highlight 4, I think, that would be interesting potentially. And then I'll touch on the faith-driven stuff and hand it over to my colleagues here. The first has been continued U.S. economic dynamism and growth. I think coming into the year, obviously, we had a new presidential administration. There were some concerning signs about the economy. We thought we might be headed into a slowdown with employment numbers dropping. There were some companies reducing employment at the beginning of the year. And then obviously we had the tariff situation earlier in the year and seeing how people would react to that. In spite of all of that, there's been kind of continued U.S. economic growth. I'll come back to some of the softness in that below that, but that's driven higher financial markets. The growth rates between the U.S. and other developed nations continue to diverge, particularly with Europe and parts of Asia. And so I think it's been a surprise to some that economic dynamism in the U.S. has been strong for the year, which has driven equity markets, in addition to the second trend I'll highlight. The second of those, obviously, is just the omnipresence of AI and the Magnificent Seven this year, or the mega caps that are all AI linked. So obviously the public market story and even some of the private market story with these private rounds around like XAI, OpenAI, et cetera, have been driven by huge technology companies that have only grown in valuation with massive bets around artificial intelligence. And I think as we end the year, there's been some question about, hey, is this really built on a firm foundation? People don't understand fully how the CapEx expenditures required for this play into the economic models of those securities. They're obviously all buying things from one another. And I don't think anybody totally understands the cycle of kind of server purchases and capacity purchases and how AI companies are dealing with each other. But the trend has just continued. It continues to dominate markets. There's been a little bit of a pullback recently, but the values of those stocks are incredibly high. And that's been the big story of US financial markets, I think, over the course of the last year. In private markets, the big story is probably continued illiquidity. We're just not seeing as many distributions in private markets as we typically would. That's been going on for probably 3 years now at this point, where we've had less than typical distributions. I think a lot of folks thought that liquidity would return to those markets in a big way this year with the new administration, with IPO markets opening up, with new folks in charge of that. And some of that started to come back. We see liquidity in parts of markets, but it's still, the distributions are lower, I think, than people expected this year. And so now a question mark for private markets in the new year is, are we going to start to see distributions which can enhance greater activity in the private markets? And of course, interest rates pay into that. And then the fourth economic trend I would highlight is everything related to affordability. And this is both a US trend, I think, as well as a developed market trend around the world. Housing markets are incredibly sluggish. Mortgage rates are high relative to the last 15 years, kind of in line with historical averages, but high relative to the last 15 years. And of course, in the US and many European countries, there's now a very, very active discussion about wealth inequality as financial markets have outpaced real growth in income, and about affordability as housing in particular with higher interest rates has the gap between median home price and median income is as great as it's been in decades. And so there's really a huge affordability problem and conversation going on in the US right now. And that feeds into kind of a wealth inequality problem. And we don't know how that will shake out in financial markets. We know it's been an incredibly sluggish housing market, which plays into a lot of other parts of the economy. But I'd say those are the four defining characteristics on the market side. And then the two things I'd highlight on the faith-driven side, and then I'll turn it to my colleagues. One is, I think there's a lot of green shoots just in faith generally around the country. I think Bible sales are up 41% this year. We recently had the opportunity to partner with a prayer app called Hallow, for example, where they're seeing record numbers of users daily. I actually got to go to the 1 billion downloads celebration for YouVersion last week in Oklahoma City, where 1 billion people have downloaded the Bible app from YouVersion. They have 300 people open the app every second worldwide. And so there's this real sense that younger people in particular have realized that they need some sort of purpose and meaning that they're lacking. And some of them are searching in the wrong places, which is another conversation that's happening right now. Some of them are returning to faith and really seeking to fill this gap, that's the spiritual gap that they feel. And I feel that that's filtering into the faith-driven entrepreneurship and investing ecosystem, where a lot of people are just more turned on about their faith than ever before, are more open about it. People in Silicon Valley are talking about their faith more than at any point in my investing career, more openly about it. And we're seeing a lot more people get in the game on the faith-driven investing side as well, where people are starting to think really consciously, how can I live out the principles of my faith, encourage human flourishing through my investment dollars and through entrepreneurship? And so I think there's a lot of tumult right now as things change, but in that there's a lot of opportunity where people are starting to question at first principles, what is important to me? And faith is filling that gap. And then if faith is important to me, how does that play into my financial assets and the work that I do every day? And so that's a really encouraging set of green shoots from my perspective.
Wow. I don't know if he prepped, guys. That was really impressive. Just off the top right there, John, to lead us off, man. Thank you.
Dude, it's poor idea letting him go first, Richard. I just want to go on that. I'm not sure how you see the ordering, but that was a bad idea. Justin, go next.
Well, Luke, we are coming to you next. John, real quick, just to recap, U.S. economic dynamism and growth, omnipresence of AI, private markets, kind of continued illiquidity, the affordability as we kind of talk markets and economy. Loved your remarks on the FDI and kind of FDE side. We're kind of come to Justin after Luke with kind of more unpacking of where we are from kind of a movement perspective as we look at 2025. But Luke, over to you. What would you kind of add to what John says as you kind of recap 2025 from your vantage point in the seat you sit in?
Oh my gosh. Thanks for nothing, Richard. Okay. So listen, I'll stick with the same rubric of kind of 4 ideas, words, and then one just kind of like thought that is occurred to me as we were sitting here. First one is the word is chaos. So there's some amount of, we talk a lot internally and in our operating companies about this idea of, you storm, then you form, then you norm, and then you perform. And it just feels like on a lot of different fronts, the White House's strategy around kind of flooding the zone, it's just constant storming and forming. And it actually feels like we're starting to norm around the idea of storming and forming. So like that is just kind of becoming the normal. I think earlier in the year, a lot of rotation, concern, kind of hand-wringing around tariffs and Liberation Day and kind of all that. And yet we've kind of kept going despite all that. There's all sorts of uncertainty in different parts of the world, just in terms of geopolitical instability. Feels like some of that may be resolving. Maybe there's new things that are getting going. I would have thought that we would be less involved, at least from a U.S. perspective, with what's going on around the world. And yet it seems like we're kind of becoming more involved than certainly I would have thought at the beginning of the year in other people's affairs. And some of that, from a biblical perspective, may be the right thing to do. So I'm not opposed to that, but it is a bit surprising to me. So first word is chaos. Second word is, in spite of all that, generalized prosperity. John highlighted the fact that, U.S. equities took it on the chin, but then they've kind of popped back. U.S. equities are up 14-ish%, I think, year to date. And, if you look at the international equities, they're actually up 25% year to date. So they're up even more. And, that's partly because they were beat down at the end of 24 and they're popping back. But that's been a bit surprising. I would have thought in other parts of the world, when the U.S. economy catches a cold, other parts of the world generally get like full-blown flu. But that has not been the case, at least as far as equities are concerned. So prosperity is second word. Third word is, I'll just echo what John said around artificial intelligence. Data just came out from McKinsey that says by 2030, there will be $6.7 trillion in data center capacity, just in terms of capital expenditure. 5.2 of the 6.7 is going to be on AI-based, application processing capability. 1.5 trillion in traditional IT. That ratio and just the outright number is staggering, I think, to everybody. And so, how that shakes out, TBD. The one difference in the current companies who are spending that money is in contrast to the 2000 run on technology companies. Those companies were largely fueled by venture capital and private equity, whereas the current spenders in this craze are fueled by cash flow from existing operating businesses. So these are very, very profitable companies that have the capacity to be able to hold their breath for extended periods of time and make these expenditures. Whether all that shakes out feels unlikely to me, but there's certainly going to be some of it that shakes out. And we all experience it if you're using ChatGPT or Grok or any of the other engines that are out there. We're all using it in ways that I maybe didn't expect to be using it 12 months ago. And my fourth word is just, generalized uncertainty. I don't know that it feels uncertain. It feels shaky. It feels like next year could be a banner year, and then there's also scenarios that we're running within many of our portfolio companies of what happens if we go into a pretty significant downturn. So, this idea of VUCA, volatility, uncertainty, chaos, et cetera, that feels very present. So those are my 4 words, Richard. The fifth, just comment I would make is that it feels like 2025 is the first year where, as we're talking about what's going on in the markets, the one word that's not coming up is COVID. Like 22, 23, 24, like we're kind of like hangover, COVID boom, COVID bust, inventory bullwhipping through the system, which we experienced in a couple of our companies last year. That's not been something that we've talked about a lot in 2025, which I think is good. On the faith-driven side, 2 things I would say in that same kind of storm, form, norm, perform rubric. It does feel like the industry and this idea, as John pointed out, that investors can reflect their faith and win some culturally appropriate ways, but also ways that reflect boldness, not just what we're against, but also what we're for. All of that seems to be taking shape in some really nice ways. There's more managers, there's a diversity of options and strategies and asset classes that are available. And it feels like a maturing of what 5 years ago was very nascent. It feels much more mature now. So those are my thoughts.
Great thoughts. Pretty good. Maybe not John Coleman level, but I'm impressed, Luke. So we got.
I just love that Luke is tempting fate by saying, "Oh, it's the first year we're not talking about COVID, so I'm expecting the first word of the pandemic to
There's
come
going to be a
in
new
from
pandemic.
like Hong Kong or somewhere like that over the next 2 months." So thanks for that, Luke. That'll ring in the new year well.
You're welcome. You're welcome.
Okay, so Luke's are chaos, generalized prosperity, AI, uncertainty, and then what John just said is the word COVID not coming up in 2025. Justin, take us home with some of your kind of reflections.
Man, I tell you what, I did not come prepared with like a good list of words, but maybe a couple of statements that I'll just kind of summarize. I'll first start off by just clicking on what Luke talked about, just the diversity and the maturing of the market. It feels like this is like one of those moments, specifically in the faith-driven conversation, where there's been a lot of pioneering, there's been a lot of starting, but the diversity of it, no longer can you just say, hey, the faith-driven ecosystem is really defined by a asset class or a couple asset classes. I think you're starting to see the vibrancy of that, but I think that you're also starting to see the vibrancy done with excellence. The way that I would say it is one of the first telltale signs for me is like, would somebody link or like or share something on social media? I think sometimes over the past 10, 20 years, whatever that time frame was, people wouldn't. It maybe wasn't done at the same quality and the excellence that people were accustomed to. But I think we're now seeing a moment where people are not only liking and sharing, but like the feedback loop is becoming complete. Some of the very same things that people will hear on a podcast or some things you hear said back to you on an interview. And that's fun for our team specifically, is they're filming some of these stories and they will be filming with an investor or an entrepreneur and they're saying, gosh, this has shaped X, Y, or Z. And some of the same phraseology from conversations or talks, if it's John or Luke or others at the FDI conference, are now coming into the ecosystem through some of these companies. And so I think that kind of people talking back to us, kind of in the same way that leaders of the movement are having those conversations. But I think that both John and Luke made this point is that there's kind of a crossroads, I think, that we're coming to as a movement, that people generally understand that their work matters. They know that their capital can make a difference. But I think they're questioning, well, how do we do it? I think we're in this how moment. We have this survey that we did a year ago with Barna, and Barna was able to come back with some incredible moments where we celebrate just what God has done really over the last decade, if not longer, that people are normalizing this faith and work conversation. 84% believe of entrepreneurs in the church are aware that the gifts and talents that they've been given are really for something more. That 95% want to use their gifts and talents for the good of others. But that same demographic that feels incredibly called and on mission, like 62% feel like they're struggling with how. And I think that that's going to be really what marks maybe the next phase in the chapter or the faith-driven conversation, both an entrepreneur and investor, is what does it look like to do this? Not in a prescriptive way where we put a tight box and a checklist of what it looks like, but we've got to make sure that we understand that we've got to put practical handles to it. And so I think that's the big thing that I feel like, if I were to say from a faith-driven standpoint, is there's been a surge of interest. People are liking it. People are sharing it. People are going to Kingdom Advisors and other groups and saying, hey, I want a river guide or somebody that's aligned with my faith more than ever. It feels like it's no longer something we have to push forward, but people and the demand is happening. But I think we're in this question of like, what does it look like? What's the how? How do we not just become a movement that has a great post, something great on social, some great talking points, but how do you take, as the movement goes wider, how do we take it deeper? And so I think that how moment is really what defines a lot of what we're seeing from the faith-driven side of things.
I love it. I think that's a really good word. Justin, what you said about the movement no longer being defined by an asset class really struck a chord. I think early on, maybe one of my observations was like, the faith aspect played into the most like potent possible asset classes, if you will. And when I think about those, it's the ones where it's like most tangible and in your face. And number one was media and entertainment, is all, all the faith driven film and content and things like that. And the other was startups, because you can take risk. You can go create a company and things of that nature. But it's seeming like we're starting to see more maturity and more traditional asset classes, or more stable asset classes, if you will, traditional private equity or things like real estate into the public markets. And then the question, like you're saying, is, hey, as it takes maturity, what is the how?
Yeah.
What is the how for not just certain investor sects and types, but
and
all
even
investors?
individual asset classes. Like when we think about real estate, the only time maybe the conversation was 5 years ago, it was all about multifamily. I think now the conversation is starting to broaden and say, okay, let's unleash the creativity to see what else is out there. And I think we're stepping into that moment, whether that's in, John can speak more into this, but just in media and entertainment, we might have always thought about it as just like a traditional film. Now we're looking at all the different types of things like generated, social, what does it look like, real life kind of documentaries. You got the whole diversity of everything, I think, across each of these asset classes that we're pushing into.
Well said. All right, well, guys, let's go back to the markets conversation real quick and visit some of those kind of headlines and key things that John and Luke unearthed. Just to landscape set real quickly, Luke mentioned it. S&P 500 is up roughly 12.5% to 13% year to date as we record this on Monday, November 24th. So markets have kind of seen a uptick for sure. There was, of course, Liberation Day in April. There's been a recent pullback that we can kind of get into. On a interest rate standpoint, that's something that people have, kind of had a ear to and an eye to, is that there was the first cut in the end of September, a second cut that took place at the end of October. So rates are now kind of sitting in that range of 3.75 to 4. That effective federal funds rate is roughly 3.88 right now, as things stand. Inflation has been stickier than folks kind of expected. We're still kind of hovering around the 3% range. I think the low water mark this year has been low 2s, but we're back up into the 3s. And so that's kind of the general landscape as the big things that you can kind of keep an eye on from a macro perspective. John, where would you want to kind of press into as you think about what you and Luke shared from kind of some of those bigger themes?
Kind of going into the next year. I
Yep.
think, the rate environment is an interesting one in that we're actually at or slightly below historical rates, depending on where you want to start dating it. And so we continue to live in this period where the great financial crisis has confused markets quite a bit, because from 2008 to current, basically, but especially to a couple of years ago, we lived in an historical anomaly where we were printing a ton of money through the various stimulus programs with GFC, with COVID, with others, ran a ton of debt in order to do big fiscal programs, both in the US and many parts of the world. And interest rates were zero, effectively, which is an historical anomaly. Now it feels like rates are high, but we're really back at more like historical averages, whether you're looking at the Fed funds rate or whether you're looking at mortgage rates. It's just that the markets are having a tough time adapting to those historical averages after such a prolonged period being below average, basically below average rates in those areas. And inflation, as you mentioned, is persistent, partially because we haven't solved the structural problems, which is especially developed country economies, but also some developing country economies like China and others are relying on debt to finance their operations at the macro level. And we continue to print a lot of money, which is going to inflate prices. It's going to inflate financial markets. And really the only way to adapt to this incredible indebtedness around the world is to print money. And so absent some sign that we're heading into a recession, softness in the employment market, softness in productivity, I have a really hard time believing that interest rates are going to go down substantially in the new year. And in fact, they're probably at about the right rates right now for normal economic activity. And so the question is, how does the economy absorb that, right? And in particular, how do we get activity in the private markets, in the IPO markets, in the housing markets, et cetera, that reflect this return to normalcy in terms of rates, in terms of normal economic activity for buying and selling houses, for building houses, for selling positions. And I think that has to shake out over the next couple of years. At some point, people can only hold on to 2 or 3% mortgage rates so long before they have to move or before a new housing stock comes online. I think at some point, venture capital or private equity firms that are holding positions that were bought in the low rate environment or at the peaks of the markets are going to have to dispose of those positions, which will start the liquidity environment. And so, like Luke said, I think 2026, one of the big questions is whether we do enter any period of economic softness, whether we do enter some type of small recession, light recession. I think there's a question mark about the valuation of AI in the markets across the different companies in which it operates, and whether we have some sort of correction in those markets, particularly amongst those mega cap stocks in the public and private markets, which have benefited from these astronomical valuation rates related to artificial intelligence. It's hard to call the timing on that, but it's also hard to believe that they can persistently stick around. And so I think headed into 2026, there's a lot of uncertainty, while at the same time, a lot of fundamental economic strength. Like the fundamental economy is doing okay. Interest rates are actually at a pretty decent level to encourage that economic activity. There are question marks around the adoption of AI and what that does to employment, which I think will be question marks for the next decade or two as we figure out what's going to happen in those markets. But that uncertainty will persist. And then I think on a macro level, what we're also seeing is, as I mentioned earlier, this kind of affordability conversation, wealth inequality conversation, and even some movements in political environments towards things like socialism, which we've seen in New York, that are really directly related to affordability, perceptions of wealth inequality, et cetera. And so there's a regulatory and wealth distribution conversation that's floating over this whole thing that could direct government policy, particularly as we head into the midterms. Overall, I think I would be bullish on 2026 for fundamental economic activity. I have no idea at the top end of the market how the AI stocks or AI influence stocks will be valued and whether that will return to some sort of historical average and we'll see a correction. But the US economy, at least, and some of the European economies seem to be on relatively stable footing. And so my hope is we can enter a period where we continue to return to normalcy after COVID, which Luke highlighted, and we can start to see normal economic activity in housing markets, in multifamily housing, in basic companies, and maybe even some rejuvenation in sectors like American manufacturing as some of the tariff environment settles into the mode in which we're operating. So I'm relatively bullish on well-valued, fundamentally active companies and related technologies in the US economy, and relatively uncertain what might happen with the valuations related to artificial intelligence and what it might do to employment markets.
Yeah, I mean, great take. I think, as we've talked about before on this podcast, some level of correction or at least just sobriety about the artificial intelligence companies at the top of the chain. I mean, I saw the data on, I think we've all seen it now. It's because it's just so staggering. It's just OpenAI spend in terms of CapEx. And John, you were talking about it earlier being north of $1 trillion, but then you've got a company that's really doing roughly 20 billion in revenue. The math doesn't pencil there. And I know there's an investment for growth, but that's such a large delta that I think a lot of people just kind of sit there and put a question mark around it and say, hey, I know that's a private company, but what does this mean also for the large customers, which are those Mag 7, those people that are involved?
And the one other thing I would highlight related to that, and then I don't want to dominate, I'll hand it to Luke and Justin, is I do think there's a chance we're at the very beginnings of an energy revolution, which could obviously be extraordinarily good for economic growth, both in the United States and around the world. I think the activity on modular nuclear energy, on solar energy, et cetera, is encouraging in the sense that it could dramatically change energy production. China is developing a lot of new energy technologies related to solar and nuclear. And so that's one trend I'm paying attention to in 2026 is I think we could, everybody's talking about AI, but I actually think we could also be at the very early innings of an energy revolution, which could obviously encourage economic growth in a variety of ways.
Yeah, that's a good point. I mean, Scott Bessent came out and had this 3-3-3 plan as a part of the Trump administration, which was 3% real GDP growth, cutting the budget deficit to 3% of GDP, and then 3 million barrels per day of excess oil production, which I think, John, is a small sliver of that larger energy kind of revolution we're in, because we all know that the nat gas side of things is where the energy comes from an AI standpoint, but then it's all of the other additional types of energy that can fund the grid or fuel the grid, if you will. All right, well, hey, before I get Justin back involved, and Justin, you're welcome to speak into this question too, and then we're going to kind of take it in your direction and let you kind of give us some final remarks here on just kind of what comes next for the movement, if you will. But both of you guys have kind of clicked into this concept of affordability, where you've got kind of in the corporate structure, earnings have come in surprisingly solid. And I think when people look to the markets, they're saying, hey, like structurally things are in a healthy spot. They're not in a perfect spot, in a good spot. And then John, you talked about that disconnect between equity holders and maybe kind of lower median earners and where they're at. And we've talked about just what has taken place from a demand and just kind of structural need for housing. And so that's driven up kind of housing affordability issues. You've got a rate environment that makes people feeling locked into lower interest rate mortgages, almost kind of unable to jump that chasm and gap. The consumer often shows up for the big events, back to school, Black Friday coming up here, that have just happened on the heels of this. Folks feel solid about the consumer showing up, but they're very passive kind of in the in-betweens right now in terms of spending and consumer health. Just thoughts on just affordability and that disconnect that we've like just kind of a little bit teased out. John, what would you say?
Yeah, I'll touch on two topics, affordability and kind of purpose more broadly. Affordability is both a real problem and a perception problem, I think. So one of the challenges is no one, I've got this new book on money coming out, and no one actually has an absolute level of wealth that makes them happy. At every rung on the wealth ladder, and the survey showed this, everybody always thinks what is enough to make them happy would be a little bit more. And one of the challenges that we have in the modern economy is there's so much visibility into the wealthiest among us for everyone, right? In a way that wasn't true when I was a kid or when I was growing up. And so I think the relative perceptions of people's well-being and wealth are driving some of the affordability conversation. I think a lot of people, for example, don't realize that over the last 15 years, if you're an American consumer at median income, we're now something like a 30% gap to many of the developed nations in Europe, right? If you look at like the UK, for example, I think their median income is the same as the 49th or 50th wealthiest state in the United States right now, on the order of Mississippi. Even really dynamic European economies like Germany are somewhere in the kind of bottom half of American states. And so there's been this explosion of wealth in the United States, even at the median income level, so not average. So this is kind of the typical consumer right in the middle of the threshold. At the same time, there are elements of affordability that are legitimate. So housing costs are very disconnected from the fundamentals. They're not quite as disconnected as people think. If you really disaggregate the numbers over the last 40 or 50 years, and you account for cost per square foot, because houses have gotten a lot bigger, and you account for mortgage costs, because those even now are a little bit lower than they were historically, the cost of the average square foot in a house is not a lot disconnected from economic growth over the last 40 or 50 years, but it is a little bit disconnected. And if you're a family that's having a hard time buying a house, I think the average home purchase now is something over 40 years old. That is causing real problems, right? And it's causing a lot of concern amongst younger people in the economy, particularly as they get worried that their economic futures are uncertain because of artificial intelligence. The early warning signs are that AI replace a lot of entry-level white-collar jobs, right? So if you're an entry-level investment banking analyst or consultant or copywriter or marketing person, your job is probably the most at risk from artificial intelligence. At least the early signs would say that. And so a lot of younger people, younger families are looking at an uncertain economic future with one of their core expenses, housing, being higher than ever. Food prices and gas prices have been inflated because of inflation over the last few years. And you're looking around at the remarkable wealth growth of those with financial assets, and you feel like you're getting left behind, even if in absolute terms you're wealthier than you were 5 or 10 or 15 years ago. And that's something you have to deal with at a societal level, not just an economic level. And I think unless policymakers find ways to talk about this, to think about this, to think about the real disconnects like in housing, encouraging new housing starts, increasing housing supply, decreasing zoning regulations, which prevent housing from being constructed, that we're headed into a place where democracies will begin to revert to things where people are tempted by things like socialism or other systems that they feel like are necessary to even the playing field. And then the second trend that's related to that for me, building on the AI thing, is this idea of purpose and meaning at work. And this is where I think Christians or faith-driven investors should have a lot to say, not just about affordability, because we obviously care about those who are genuinely left behind in the economy. But in terms of those who are wondering, like, am I going to be able to have a fulfilling job? A lot of the techno elites are kind of saying, well, with AI, we'll have more leisure time. People will be able to get a universal basic income and live fine, and AI will kind of govern the world. And to me, that's a bit of an apocalyptic future, because we think that meaningful work, that feeling like your talents are being put to good use, is an incredibly important part of a person's feeling of purpose, of human flourishing. All the studies indicate this. Faith-driven investors know that meaningful work, feeling like your talents are contributing to the flourishing of others, is important. And so I think we should have an increasing number of things to say, both about the ways in which we help restore affordability, take care of the least among us in society, both in the private sector and the public sector, but also in the way that we create careers, jobs, companies that encourage financial inclusion, that encourage meaningful work, that encourage apprenticeship in an era where it might be just easier to replace junior employees with artificial intelligence, and we're not going to be apprenticing as much. And so one of my hopes is that our faith-driven investor community and faith-driven entrepreneur community, rather than having its head in the sand about those trends, can actually do things within the context of their investment portfolios and companies that paint a brighter future for people, and hopefully paint a future where even in the midst of all this disruption, people can have more meaningful work, can flourish, can focus their talents on things that matter.
Well said, man. A lot of good thoughts. Justin Forman, I'm going to come over to you to kind of just tie a bow on this. A lot of golden nuggets have been shared, and I want you to kind of click into any of those or share others as it relates to the broader movement.
I think it's an exciting time. What a time it is to be live with technology and everything, and the rapid pace that we're on. I think the moment that we're all stepping into, and John and Luke have alluded to this, is what a time it is for entrepreneurs and investors to really solve big problems. I was struck by one of the things that John was talking about, really connected to something that Elon had posted on X recently. He talked about this idea of poverty can and will be eliminated, but envy is eternal. And I thought that was just such a profound thing. And there's so much, I think, even just in our world today, little tweets like that we can see principles that we can see in scripture really behind them. Like the line is getting shorter and shorter of how these ideas and these thoughts can be connected. And so I think we're in a moment that when we can look at it and say, yes, the absolute poverty can be solved. Now, relative poverty, that's going to be something that we can look in scripture and see greed, and we can see all the different things, what might be with us for the longer term. But we've probably talked a little bit about this, and I know that we will more in the year ahead, is what does it look like to create spaces and tables for entrepreneurs, investors, ministry leaders, everybody to come to the table and use all the tools at our disposal. That's one of the things I love most about John's new book is that he's working on is it's really talking about how do we see money not just through one piece of the puzzle, but really bring it all to the fight and saying whether we're investing, we're giving, how do we bring that there? Because I think that we've internalized that a little bit as a movement. One of the things I'm struck by is if you guys remember that graph that Greg Lernahan did years ago, I think it was one of the first FDI conferences.
Yeah, the 2x2.
Yeah, he's got that great 2x2, but he then talks about his personal journey and saying, hey, when I exited, I thought, man, I'm going to go back into ministry. We're going to do this, that, whatever. And he looked at all the blocks of capital that there was at disposal and found out that the number of blocks there that is in philanthropic capital, even if it's doubled, tripled, quadrupled, it's still not even going to scratch the surface to solve some of these problems. I mean, you look at the housing crisis, estimated $14 to $16 trillion needed to solve that. Total U.S. charitable giving last year, about $592 billion. So less than 4 or 5% of what's needed to solve some of these problems. So I think we're in this moment where some problems legitimately could be solved. We can really kind of move the role of philanthropy not to be the long-term payer, but to be the catalytic place where some of these conversations can accelerate and some of these problems can be, the solutions to them can be discovered. But I think that there's a moment here whether it's uncertainty or opportunity ahead in the markets, I think there's a reminder here for faith-driven investors just to say, how do you see risk? Now, I'm not trying to ignore fiduciary responsibility and recklessness, but like, it's the theme of this year's conference. Is it seeds versus silos? Are we going to be in this moment planting seeds that will lead to those green shoots years later? Or are we going to buckle down, keep it in the silo? And I think this is one of those moments as we step into the year ahead that we have to really take as good of a look at what does it look like to mean to re-risk in this moment? What does it look like to take those righteousness risks, not the reckless ones, but the righteous ones that might have that compounding spiritual impact in the years to come?
Come on. Seeds versus silos coming in January. Looking forward to that. John, are you about to hop in with something?
No, I would just also offer a word of encouragement to close us. I did this like silent retreat for the first time a couple of weeks ago, and it gave me a lot of time to read my Bible. And I kind of read some Old Testament stuff. I read Judges, Ruth, and 1 Samuel, and then I read some New Testament stuff. And it was just a reminder for me of how different the world is because of the words of Jesus and because of the impact that that's had on the world. I mean, you read Judges, and it is disturbing, right? The ancient world, and this is not a comment on the nation of Israel specifically, the ancient world was just full of violence and chaos and corruption and misdirection. And even those we respect and admire, like Samuel, who was one of Israel's greatest prophets, his children were corrupt when he tried to put them in charge. And that was part of why the Israelites needed a king or wanted a king. And then you look at the words of Jesus when you read the Gospels and the way that the apostles behaved and the influence that that's had on the modern world. And it's like, gosh, it's so easy to forget how the words and actions of Jesus like totally transformed the entire fabric of existence for modern people. And the encouragement I would offer is, in spite of the chaos and AI and all these other things, like that process is still in the works, and Jesus still came, and his word still is transforming the world around us. And we know that the battle is already won. And so it's useful sometimes for me to get historical perspective just about the gratitude we should have for the transformation that Jesus has already brought, that he's continuing to bring. And I think as faith-driven investors and entrepreneurs, as people of Christian faith, no one should have greater hope for the future than us, because we've already seen what's possible and what he's doing now. And I think there's a lot to look forward to.
Amen. What a reason to celebrate this Advent. Justin Forman, John Coleman, Luke Roush, man, what a privilege to have you guys on to recap and kind of close down 2025 on the FDI podcast. Friends, there will be one more FDI pod that drops between now and Christmas, but this is your final marks on the markets for the year. Thank you for joining us. What a special year it's been. Looking forward to a great 2026 together. I'm Richard Cunningham, and we will catch you next time. Thank you all.
Come for content, stay for community. Join a faith-driven investing group online or in person. Visit faithdriveninvestor.org. That's faithdriveninvestor.org.